You might not have realized it yet, but as you're listening to this, your money is losing value. Not because you spent it, not because you made a bad investment, but because that's how the financial system works. Governments print money, central banks expand the monetary base, and the result is simple: inflation. Slowly, silently, your purchasing power is being eroded. This problem isn't new, it's structural, and it was in direct response to this system that Bitcoin was born. Back in 2008, in the middle of the biggest financial crisis in decades, while banks were being bailed out with public money and millions of people were losing their savings, someone created an alternative financial system. It's based on code, math, and rules that can't be changed by politicians or institutions. The most important rule is scarcity. There will only ever be 21 million Bitcoins, never more. It doesn't matter who's in charge, what crisis hits, or what the economic outlook is. No one can print more Bitcoin. While traditional currencies can be created endlessly, Bitcoin is limited by design. And in economics, scarcity always creates value. For thousands of years, gold was used as a store of value because it's scarce, durable, and hard to produce. Bitcoin is the evolution of this concept for the digital age. It's scarce, but it's also divisible, easy to transport, can be sent anywhere in the world in minutes, and doesn't rely on vaults, banks, or borders. Another key point is decentralization. Bitcoin doesn't belong to any country, company, or bank. It runs on a global network of thousands of computers spread across the planet. To shut it down, you'd have to shut down the entire internet. This makes Bitcoin resistant to censorship, manipulation, and government control. This isn't just theory. In countries facing hyperinflation, political instability, or monetary crises, like Argentina and Venezuela, Bitcoin is already being used to preserve wealth, send money, and protect savings from the collapse of local currencies. While traditional financial systems fail, Bitcoin keeps running 24 hours a day, 7 days a week, without asking anyone for permission. A lot of people criticize Bitcoin for its volatility. And yes, it is volatile. But this volatility isn't a flaw. It's a feature of a new asset that's still in the process of being adopted. Every revolutionary technology went through this. The internet was called a bubble. Smartphones were ridiculed. Today, they're indispensable. When you look at Bitcoin's price in the short term, it seems unpredictable. But when you zoom out and look at longer cycles, the story is clear. Long-term appreciation. Those who tried to get rich quick lost. Those who understood the long game won. In recent years, something has completely changed the game. The entry of major institutions, investment funds, banks, publicly traded companies, and even governments have started buying Bitcoin. ETFs were approved. Institutional custody solutions emerged. And Bitcoin went from being a fringe experiment to a strategic asset within the global financial system. Institutions don't jump on trends. They get in to protect wealth. Bitcoin doesn't even need to replace all the world's currencies to succeed. It just needs to become a relevant store of value. If it captures just a fraction of the market for gold, government bonds, or global reserves, the impact on its price would be enormous. But maybe Bitcoin's greatest value isn't financial. It's philosophical. Bitcoin gives the individual back control over their own money. No intermediaries, no authorizations, no censorship. You don't ask for permission to use Bitcoin. You just use it. In a world that's increasingly controlled, monitored, and centralized, this is real financial freedom. Buying Bitcoin isn't betting that the system will collapse tomorrow. It's protecting yourself in case it continues exactly as it is. It's a hedge against inflation, fiscal irresponsibility, and decisions you don't control but that directly affect your life. You don't need to put all your money into Bitcoin, but completely ignoring it today is taking a huge risk. Because the question isn't, what if Bitcoin fails? The right question is, what if it succeeds and you're left behind? The biggest financial transformations in history don't announce themselves. By the time everyone agrees, it's usually too late. And Bitcoin is still being questioned, criticized, and underestimated. And historically, that's exactly when the greatest opportunities arise. Thanks for watching. If you found this valuable, be sure to subscribe for more content.